Israel attacks Iran, and of course, the stock market sold off significantly on Friday. Does that mean there is more weakness coming? Are we on the edge of a more substantial stock market crash? Well, I will answer that question and show you the things to watch for as an indication that it's about to get worse. Plus, I'll do my normal analysis of the markets, and then I'm going to show you a stock that I traded on Friday, one of the few areas of the market that went up sharply, and it demonstrates how you can make money buying stocks even though the overall market is selling off. So that's what we're going to do. Let's dive right into it, and let's first begin with the discussion of the weakness on Friday and what it indicates for the overall market, perhaps being on the edge of a greater stock market crash. Conflict in the Middle East, as we often see, brings about market weakness. But if you look at history, you will know that these conflicts don't usually affect the market that negatively. The first reaction is typically negative, but ultimately the market tends to shrug these things off. So we shouldn't be too concerned just yet. Really what I like to do is look at what the money in the market is doing. What are the big investors in the market doing? And to do that, I consider trend and pattern shape. Now this is always easier with a picture. So let's take a look here at the daily chart of the S&P 500. And you can see that there was some selling pressure on Friday, but in the context of where the market has been over the last few months, it's really not that substantial. It's sort of breaking down through that upward trend line, but it's not a major breakdown. Now, I do have one area of concern, and that is this. Notice that the market fails to make a new high here compared to the highs from February. And that means that the market's setting up a falling top, which is typically the sign of a market that's topping out. Now, if we can reverse and go right back up here, then we're fine. But if we get more weakness to the downside and start to break this upward trend line, then we could see more weakness. Now let's dive into a shorter term chart. This is now the hourly chart of the S&P. And you can see this upward trend here on the very short term chart was broken on Friday. And that is an indication that we probably see a little bit more weakness. However, again, until we really start to break that daily upward trend line and even the weekly upward trend line, we shouldn't be too concerned. I'll get concerned when I start to see the S&P 500 go through that level, which are the lows of about a week and a half ago, or even more critically, this one. We call these inflection points. This is where the market reversed and bounced higher. And right now we still have this cycle of rising bottoms. But if we start to break that cycle and start to build falling tops and break down through this floor here, then I think you want to be defensive. Do I think you should be defensive today? No, just carefully watch the market because it doesn't look all that bad yet. All right, let's get into this week's normal market analysis. And we're going to start off with a look at the S&P 500 chart. And here it is here. We already looked at the daily interval, but what I want to look at now is the 3-year weekly interval. And you can see that over the weekly time frame, we have these consistently rising bottoms, and that hasn't been broken. Now we've rallied up to just about the highs, but we're falling a little short. If we break down through that 580, 590 level on the S&P, then we will have built a falling top, and that could lead to more substantial weakness. I don't really see any strong reasons that that's likely to happen yet, but it doesn't matter how smart we think we are. We just do what the market tells us to do, because ultimately the big money in the market is going to move the market. And so it's not retail investors that have any effect on this. It's the large capital that has the best information, and they will move out of the market when there's a real problem. All right, let's keep moving along here with the NASDAQ 100 chart. QQQ is the symbol. And you can see same thing here, little breakdown, slightly falling top from those highs, but we're not really breaking this upward trend line. We're not building falling tops yet, so it still looks okay. Now the Russell small cap is a little bit weaker. We can see that the bottoms are still rising, but more substantial weakness the last couple of days, certainly well short of those highs from November, December of last year, but we have not broken this upward trend line, so it's okay, but want to watch this one a little more closely because it may have a greater issue. Moving along to the Canadian market, T.XIU. No real major weakness there, largely because oil stocks were up substantially, and I'll show you one oil stock that had a great move on Friday. Just stick around to the end of the video and I'll show you how I traded that. But on this one, yeah, the Canadian market probably had pockets of major weakness, and then strength in the oil sector sort of propped up the index. Let's take a look at gold, GLD, and then we're going to look at the oil chart and you'll see that big jump. So gold has bounced back the last couple of days. Tends to happen when there's military conflict in the world, as there's a rush to safety. And you can see that there in the gold chart. If we look at the short-term chart for gold, going to the 1 month time frame, you see it's quite choppy. That choppiness, that volatility is a sign of uncertainty. So I do think gold is risky up here, but if you're in it, I wouldn't sell it. I would just dance close to the exit door. All right, let's take a look at USO as the oil chart. And there you can see the substantial strength in oil. And it's interesting, you know, Iran was attacked by Israel between this day and this day, and yet the oil market was moving up for 6 or 7 days in anticipation of that happening. And that just, again, demonstrates how the market tends to predict things before they happen. The big money players in the market, those managing billions of dollars, they have the access to information that allows them to just make better predictions. And so you could see the oil market started to move up in anticipation of such an attack. And then, of course, when the attack happens, you have the big gap up in oil. Now, if we look at the 3-year weekly chart of oil, you see the big jump this past week, but now it's coming into resistance up here. Down at this level, you might remember if you're subscribed to the channel here and watching these videos every week, you'll know that I was saying the oil market looked ugly, but it was probably going to bounce back. Right in there at 66, it made what I call a dead cat bounce candle off of these lows. And sure enough, it makes the big bounce back. Now it's coming up to this resistance level, which it's hit many times, and it's likely to reverse up there. So we may open strong early next week, but then probably get stuck to the upside. All right, let's take a look at the currency markets. UUP is the US dollar, and it's a bearish market. You can see the downward trend there. Let's take a look at Bitcoin, GBTC, and we can see that Bitcoin has been stalling in the last few weeks near those highs. It's still a healthy chart. If you look at the 3-year weekly chart, you see that it's still in an upward trend. But one area of concern is that the pace of rising bottoms is steeper than the pace of rising tops. That's called a rising wedge pattern. And it demonstrates that buyer enthusiasm is waning. And when you break the upward trend line, it can often lead to a sell-off. So again, no reason to be concerned about it yet, but something just looking forward a few weeks or months that could happen that we want to keep an eye on. All right, let's take a look at the bond market. TLT is the symbol there. And you can see that we've been stable the last 4 or 5 weeks, but still in a long-term downward trend. If we look at the 3-year chart, you can see that the overall bias has been down, which means interest rates remain elevated. We are at support. We've hit it a couple of times here. So we should bounce off of it. But unless we break this downward trend line, I'm going to remain fairly negative on the bond market, which means interest rates remaining elevated. All right, so let's look at my ratings then. You can see short-term still bullish on all stock markets. Long-term neutral, except the Canadian market managing to move to new highs. And again, the emphasis of commodities in the Canadian market helping out there. Gold bullish on both time frames. Oil short-term bullish, but only long-term neutral because it is rallying into that resistance level. US dollar bearish, long-term neutral as it is near some support. Bitcoin lowered the rating to neutral short-term, but still long-term bearish. And bonds neutral on both time frames. It is at support, but we still need to see a little bit of a bounce back in the bond market. All right, so I told you that there were some areas of the market that showed particular strength last week on Friday when the overall market was selling off. Some of these small cap, low float oil and gas stocks had big runs. And this was the best one, I would say, RBNE. It started moving pre-market, and you can tell the pre-market, that's sort of this here. This is 9:30, the regular open of trading. And I first started buying it right here. The reason is it made my action candle, which if you watch these videos every week, you'll know that that's an important thing for me. It had some other action candles there as well, which were also interesting. But then this was the break of a pullback, and it really set up for this nice move, which it doesn't look like a lot, but this is actually from, $11 up to $19 in about an hour. So a pretty significant move on a percentage basis in a relatively short period of time. And it all happens because this is an alpha sector that is benefiting from the thing that is dragging down the rest of the market. Of course, the Middle East tension caused rise in oil prices, caused speculators to rush to oil companies. This particular one doesn't have very many shares available to trade, and it had millions of shares of buyers for a company that doesn't have a lot of shares to buy, and you get the result, a stock that made a huge move to the upside, and it all starts with abnormal activity. That's what that action candle is all about. So make sure you are registered at stockscores.com for the free weekly newsletter. You can get that at the homepage. Make sure you're subscribed to this channel. Give me the thumbs up if you enjoyed the video, and most importantly, trade well.